So I'm gonna go ahead and get straight into it. I'm not gonna waste any time. Um, with the 50K Express funded accounts, keep in mind I have five of them for a total of max allocation with the 50K accounts, which would be $250,000 in funding. Um, I believe I posted a video 6 days ago, so in that video, that showed my beginning progression with the accounts. I believe that was 6 days ago, so on the 26th, I think I made that video saying that I had made 3K, pretty much starting out the trading day on the account. After that, I've just been swinging, pretty much just holding out my trades, taking good ones, doing what I possibly can. Besides the trade that I took on Monday on the bank holiday, I didn't make any money on that day, but I'm gonna go over pretty much my charts and things of that sort for the week. Um, Overall, we are now sitting at roughly a little bit over 10K again. Um, I don't know exactly what the numbers are necessarily, but the monthly P&L is at the top. So if you take 2187.60 and times that by 5, because there are 5 express accounts that all have the same balance. So this is pretty much the essence power of copy trading. This leaves me at a $10,938 dollar balance going across all 5 accounts. So pretty much made 10K in 3 days. Well, really in 3 days, I made about $9,500. Then the fourth day, that really put me over the 10K mark. Just simply making over $250 a day, going across 5 accounts is that would net profit me $1,200, 1,250 every time I trade. So even if I don't come out with a successful trade, the long trades, the trades where I'm making $1,000, $2,000, $3,000, it's fine. I think I'm more than satisfied with securing and net profiting, $200 a day. That's literally making me $1,000, per trading day. Um, I'm just trying not to be greedy with these accounts. Definitely don't want to, lose my fundeds and start the whole process over. Because after my last batch of payouts, yeah, it was a substantial amount of money. But imagine if I would have kept those accounts longer. I wouldn't have to be going and cycling through these evals, making 40 to 50K going across eval accounts, and I could have been making that in my funded, taking the same trades. So moral of the story, this is where we are now sitting at with the accounts after one, two, three, four, five, six trading days. We are pretty much overall up 10.5K, just about. So that's very good for the first week of trading. Uh, Only lost one trade, which was the trade on the first. Um, Trying to see, so you can see my trade win rate, 75%. My average profit factor, my P&L dips. As you see all of that. My best trade was just the one short. Just taking a quick little scroll through, just so y'all can see. It's real. It's nothing hidden. It's not fake. It's real money. Now, what we're gonna go over is pretty much the trade that I took. Um, this was yesterday. Trade that I took on Tuesday. Um, I believe I took this down for about 30 points, just about. Yeah. So this is just about like 30 points. If you interested, just take the entry price and subtract that by the exit price. That will tell you exactly how many points I made. The contract size was 2. So in Q, the contracts is pretty much going to be what I think it's a 0.25 a tick. Four of those ticks put together create 1 point, which would make it $20 per point. I think it's 0.50. Cannot remember exactly. All I know is one contract sizing is $20 per point. Two contract sizings would be $40 per point. So I popped two contracts, $40 per point, and caught 30. That net profit me about $1,100. And this was the trade that I took in early New York. Really was already displacing from Asia, creating the high of the day, and from there the daily, weekly was pretty much just expanding into the downside. Um, I get into the PD array and things of that sort. I was looking at it traded into. Just want you guys to be able to see a little bit of my trade history. I always like starting off like that before I get into my trade breakdowns. Um, all right. So pretty much on Monday, let me turn my chart executions on just so you can see. So pretty much on Monday, Monday was pretty much what I thought was going to happen on Tuesday. And this is why I, it's like, I don't know, I'm a little iffy. I probably won't ever trade bank holidays ever again. I was looking for a continuation of the short to the downside. Got in way too late. Honestly, I was expecting for it to break down a lot stronger. So I ended up taking a short here, and I think catching like 3 points before I got stopped out or some shit. So I made like $50 on the day here, pretty much trying to catch this downpour, thinking that it was gonna do this on Tuesday. It did not do that on Monday. Monday it pretty much played around with me. I got back in here at 9:30. I was expecting at 9:30. I was like, okay, we got the rally. We're above midnight opening price, things of that sort. I was like, let me wait for a confirmed break, and that's where I fucked up at. I got in at 9:30, trying to get in underneath this low here at 33.44 or 33.447. So that's pretty much me selling underneath this low here. Uh, Pretty much tried to trade a break, anticipated a break was going to happen here, and then we were going to sell short. And I wanted to see us come down to here and rally down and trade underneath Monday's low, which is pretty much what we ended up doing on Tuesday. And Tuesday showed a shit ton of displacement to the downside. So after I missed a short, literally let it rally against me for like 30 points, just about. I think about like 30, 40 points, one contract. I didn't do anything crazy or risky. And then I got a little bit impulsive and I wanted to make my money back by catching a continuation of the long. So I ended up getting in at 23,489, which there was nothing wrong with me getting in at 89. It was just the likelihood of the market conditions holding out the buy from up here. And I wanted to see it rally up and take these highs. So it would have pretty much been like a very quick trade where I could have made a buck, catching maybe like 15 points to the upside with two contracts. Yeah, it would have made me money, but would the money I have made been worth it? So with me taking an $800 loss and me being able to catch probably like 15 points to the upside from that entry, I would have probably made like $300, and that would have bought my loss a little bit substantially lower. I just ain't like how much money I ended up losing on the day, catching this type of trade on a bank holiday. As you can see, even though price did set itself up in Asia, which is pretty much the next trading day, I had no business trading this price action on Monday. So that's my fault. Definitely consider myself to be very impulsive, greedy on Monday. So I locked out, wrapped up, left the charts alone, and pretty much just waited to see what the next trading day was gonna do. So I do like taking the 1800 GMT. That does represent true day, and this is pretty much our true daily range of Tuesday's range. It was already displacing itself in Asia, and we did nothing but continue to displace even lower in New York and of course, London as well. So really was just looking at the sell side of the curve, and I want to take the chart executions off in a little bit. After I explain Tuesday's trade, I just hate looking at it on the chart. So you see in Asia, we pretty much kept displacing to the downside. Market continuously keep making lower lows. We keep attacking, rating, and then we get to Tuesday. So Tuesday's whole basis on, this trade setup was to see a continuation of shorts. So the things that we can notate here on Tuesday is the midnight opening price. We understand where we're at on the day, even though true day is in Asia and that represents the true beginning of the range. We were already bearish. So anything you can identify back here when it comes to just order flow, being able to identify the fair value gaps, things of that sense. You're looking for reactions to be expected off of those levels, highs to be formed um, within those price imbalances, and markets pretty much respecting that continuously, trading lower. This is pretty much like what I was seeing from my indications with price going lower. I was pretty much expecting maybe the high today to be formed here, and if that was going to happen, according to the interbank price delivery algorithm, of course I'd be anticipating that we would flip here. So this would be a market reversal, scenario here. Really just a way to look for continuation of shorts. So we get that here in this 15-minute imbalance. It's a 5-minute refinement of this 15-minute imbalance. Price trades into this 5-minute imbalance with that 15 combination, and we end up making the high today here in London at 3. So as soon as we hit 3, the market dipped very hard for the next 10 minutes, came up, retested this low here. Uh, Really, this is an order block from a higher time frame, 23/4/12.75. So if you are trading on Top Step, you can just really copy this level and slap it to your chart, and you can get an understanding of why I have this order block marked up, why we're looking for this pricing now, and pretty much what it's doing for the beginning of the day. So here, the market comes in, we expand lower, comes into the FEG, and the market rallies into it, respects it, wicks out here at 330, and then on that 330 candle, the market expands lower. So this is pretty much all I'm seeing. I'm seeing the market trade out of this consolidation. And out of that consolidation, we have displacement being shown to the downside. We come in, retest, and then the market shoots down lower. From there, we consolidate again. So same shit, same bias, bearish. I'm looking for the same shit to happen here again. Just waiting for order flow to pretty much just stack. And in that, I'm just waiting for a proper trade again in the consolidation. So the market consolidates again here, trading a breakout. The market breaks out. I take my trade literally as soon as it breaks this low here. I got in on this candle at 23,265.25, and I held it. I was definitely looking for us to displace lower, of course, but once I started seeing this chopping here, this is pretty much me trading out of session. So because of me trading out of session, yes, where I got in at, it was pretty much a 11 RR, 11.67. Target was this PD array from the daily, weekly back here. That was the low from the Wednesday, August 20th. I was pretty much looking for price to come down into this area And it definitely did at 23.035. It tagged that level, and we had a strong reaction away for this level, giving us a buy setup on the rest of the day after lunch hour. I was trading in the morning, the sell side of the curve, and I was really done in the earlier session of New York, so there was no reason for me to be a market participant for the rest of the day. I've already had made my money in 15 minutes. So in about 15 minutes trading out a session, 15 minutes 39 seconds, I was able to capitalize on about roughly 30 points, making about how much is this on the day going across those accounts? 11 1140 times 5. So it was about roughly $5,700 made in 15 minutes. So when you're copy trading, it's just the power that you have and just making large sums of money without even having to try too hard is crazy. So now that I explained those trades for Monday, and then of course the trade that I took Tuesday that I was in for like 15 minutes, I'm gonna go ahead and wipe off the chart executions and continue to pretty much just break down the trade for Tuesday. Nothing's pretty much happening right now with price action for me to talk about here. I'm still waiting for price to pretty much set up so I can get an idea of what it might be doing for 9:30 because it is 6:36 in the fucking morning. But I do owe the community and of course YouTube a video of consistency. So um, pretty much a risk-free trade after that break. The market never came back up to my SL. So if it wasn't out of session, I more than likely would have held this trade and been looking to take that same trade that happened here. Um, Speaking of the 10 o'clock PO3, that candle completely flipped bearish after they traded into this 15-minute refinement of this FVG on the 30-minute chart. So you can go and you can study that. But it had that break in retest scenario where we came in retested an old low, and in that we traded into FVG, the 10 o'clock candle here. After we had that 9:30 impost, you'll see 9:30 came down, traded into that reaction level off that daily, weekly, making the low of the day at 23.024.75, and from there we rallied up. I believe there was some slight SMT divergence going along with ES in the Dow. You can study those lows. Really just slapping on here real quick just so you can see the correlation that I'm identifying. So you can see how on the Dow we made low, higher low. ES we completely swept liquidity, and NQ followed the same market structure of ES. Uh, it's the same shit on the hour chart, but I would go up to the hour chart just so you can see the price. And I'll go full screen. So you can see how on the hour we made low, higher low, higher low, and then right here, ES swept. So after we traded into that daily, weekly level, where I was expecting price to pretty much make a reaction, and another reason why I did not take a trade at 9:30, because it was already overly bearish, it overly sold. The continuation that I wanted to look for in shorts, it did not happen at 9:30. It literally happened at 10 o'clock, and then for the rest of exposure for the next like hour, it held the rest of the bear swing. I was pretty much just studying it. I hopped in on the demo, but I forgot about the demo account running from this entry here and taking it down to this low, and it never even hit it. It was off by like a point, and it completely flipped. It did not want to trade past that level. It respected it. So in that sense, you get a bullish scenario with price pretty much after lunch hour to catch the continuation of the long here, and of course, pretty much creating a BISI in the sense sell side inefficiencies for buy side liquidity, and it rallied up. So I did not trade the morning. I didn't trade the morning session at all. I was literally done 3 hours, literally 3 hours, because I traded at 6:30, so I was done 3 hours before market opening. There's no reason for me to put myself back into the market unless it's for the purpose of just studying the price action. I just wanted to see if the short was going to continue to pan out, and it did not. So that was my trade that I took. And that was the SMT for the buy. Give you guys something to study. And then, the 10 o'clock flip. This was the opening of the candle. We rallied, straight into the 15-minute, 30-minute fair value gap, and it completely flipped. From there, it broke structure. Really, the break happens as early as here. But we break, closure below, a willingness to take out lower pricing. Even if you would have traded the 10 o'clock PL3, I don't know exactly how much you guys risk per trade, but if the model is there, 15, 20 points, that's what I like to risk, and I'm taking it down. So that would have been like a 182 point trade. It fell down for 181 points. So as I said, it was literally a 1 point difference. Uh, you holding trade out for like one extra point, extra $20 made you miss out on a great move if you did participate in this short to the downside and got chopped up in the flip. I don't know. But that was pretty much like my whole thought process behind the trade. I was just looking for it to continuously keep going lower, but I was already done and out of the trade in 15 minutes before market opening. So, I'm glad I was able to actually participate in this side of the curve rather than waiting for this to expose itself and then for this to happen on the opposite end. So trading the sell side of the curve for me was what I seen, what I liked. I took the trade, I made money, I'm done. Now for today, today is new, it's fresh. Not really much for me to say at this current point in time. I'm really just waiting for price to set up so I can just continuously keep studying it, see what happens at 9:30. So I don't have really much to say for Wednesday. It is a new day. I just pretty much wanted to get on here and chop it up about the trades that I took on Monday and Tuesday, how much money I made, what my account balances are sitting at, and just a quick little trade overview just to give people something to look at, levels and things of that sort to study, get a idea of what I like to pretty much identify, or I guess what I see with price. So far so good. This would be my second time pretty much making over 10, having 10K months. The first time was about a month and a half ago. I made over 15 grand. Now a month and a half later, I'm literally sitting at the same spot with the potential of making a lot more. And I have 5 accounts now instead of 4. Because remember back then I lost one. So the profits that I'm making now is like 2 times what I was making before. So it's definitely a lot easier to make money. All I have to do is just stay level-headed, secure profits. Literally one day away from payout, so I'll possibly pay myself out just something for my time. I honestly don't want to look to be taking too many payouts at all. I really want to stack these accounts up, build it up, create something. But other than that, it's pretty much a trade recap for Monday and Tuesday, uh, and my I guess journaled entries for my trades, because you can see my chart executions. Um, Tuesday, Monday, it wasn't necessarily any hard trades for real. It was just a continuation of bearish price. And if you weren't able to catch that continuation in Asia or in London, you had the possibility of catching another leg of the short going to the downside at 10 for that PO3. And that PO3 was overly bearish at that time, before the candle completely flipped. A 10 o'clock candle right here. Let me take the drawings off just so you can see it. So that's that high right here of that 10 o'clock on the 4 hour. That's what it looks like on the hour. And you see that fair value gap that we identified there. That's the trade that we took on your 5 minute, 15 minute, 30 minute chart. So always remember price is fractal. The same shit that you're seeing on the lower time frame is the same representation that it holds on the higher. So you use that as confluence for you to be able to participate in these trades and get a good read on the candle. Of course, if we're above the candle opening, you expect manipulation to happen there, trade into that fair value gap, and then you look for the candle to pretty much flip, and you trade the break of that candle and take it lower. If the candle is going to continue to expand lower, then you're going to look for lower price objectives to be met. Um, and that's pretty much the whole style or approach I've just been having. I just pretty much been waiting for candles to close and the idea that the next ones will continue the price action in the correct direction. So if I'm not trading 9:30 or new candle openings, then I'm possibly trading 10 o'clock and I'm done by the end of that 10 o'clock PO3 for the 4 hour exposure. Um, it's as heavy as the confluence can really get for me for taking these type of setups. When I'm looking for price to trade into these PD arrays. So that's pretty much it. Uh, really don't have anything else to talk about because it's still fresh in the week and it's like in my head. It's like wow, like this shit is amazing. Honestly, win, lose, or draw. Being able to sit here and make this type of money like this is definitely amazing. I'm definitely glad I stayed down and remained humble. But that's it. Now at this point, I'm just fucking rambling. So I hope you guys enjoyed the markup and the review. What I was looking for on Monday pretty much happened on Tuesday. Again, in Tuesday, I executed on the trade and made whatever I made out of it. Just trading what I see, and that's it. You guys have a great day.